Welcome to Academic Gain Tutorials. In this video, we will look into the differences between capital stock and treasury stock. Capital stock is the amount of common and preferred shares that a company is authorized to issue, recorded on the balance sheet under shareholders' equity. The amount of capital stock is the maximum amount of shares that a company can ever have outstanding. Issuing capital stock allows a company to raise money without incurring debt. The drawbacks of issuing capital stock are that the company relinquishes more control and dilutes the value of outstanding shares. On the other hand, treasury stock is formerly outstanding stock that has been repurchased and is being held by the issuing company. It is a contra-equity account because it reduces total shareholders' equity on a company's balance sheet. The cost method and the par value method are the two methods of recording treasury stock. So, let's look into the basic differences between capital stock and treasury stock in a tabular form. Difference number 1. Capital stock represents the equity shareholding of the organization, indicating corporate ownership, whereas treasury stock represents the shares repurchased by the organization and held in its treasury. Number 2. The primary intention behind issuing capital stock is to raise funds for various stages of the organization's development, while the intention behind repurchasing shares to form treasury stock is to reduce ownership dilution and potentially exploit undervalued shares. Number 3. Capital stock forms part of several financial ratios such as EPS, return on assets, and return on equity, whereas treasury stock is considered negative capital and does not form part of financial ratios involving share capital. Number 4. Capital stock is reported on the liabilities side of the balance sheet under share capital, including authorized, issued, and paid-up share capital, while treasury stock is reported as a reduction from the total share capital of the organization. Number 5. Capital stock comes with rights such as sharing in profits, voting in meetings, and receiving assets on liquidation, whereas treasury stock does not have voting rights or other shareholder benefits. Number 6. Capital stock can be held by promoters, management, employees, other companies, or the general public, while treasury stock can only be held by the issuing organization. And finally, difference number 7. Capital stock includes equity and preference shares, whereas treasury stock can be equity or preference shares, as long as they are repurchased by the issuing organization. So, these are the differences between capital stock and treasury stock. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.